if you know that something is being adopted at this speed and it's a network of money at its core, and you can buy an infinitesimal fraction of it, so everybody can buy 10% of their net worth, then everybody who takes this opportunity will probably have the biggest opportunity in history to make money. A friend of mine, one of my clients, tapped me on the shoulder and said, "You should take a look at Bitcoin." This was 2012. And I'd been aware of Bitcoin, and I took a good look at it. And he explained to me both the store of value proposition and the blockchain element, that anything could be trusted on the blockchain. I looked at this and I'm like, oh my God, this is the future that we need. Because the problem we've got is when a firm like Lehman Brothers goes bust, nobody knows who owns what. And somebody's going to get screwed in that equation. Just one of the very issues at the center of the system. Nobody knows who owns anything. So I started looking at that, and I started writing articles and invested in it first time in 2013. 2014, I started Real Vision because I wanted to democratize the very best financial information. Nobody gets access for an hour to the world's most famous hedge fund managers unless you've invested $100 million. Real Vision changed that equation entirely and said, listen, forget all this sound bites on CNBC of 3 minutes. It's worthless. We're going to give you an hour of the world's most successful investors, the best independent analysts and strategists, and then you have a level playing field. And that was a game changer. I mean, since Real Vision started in 2014, there's probably been 200 podcasts that's copied that model. So this is this movement. There's two things. There's the democratization of information, and then there's crypto. So crypto, as it starts building out as an ecosystem, you start to realize that, okay, this is now the fastest adoption of any technology in all recorded human history. From 1990 to 2000, grew at 63% a year. That was the fastest adoption of any technology in all recorded history. Prior to that, mobile phones was the other one. But what happens is the internet technology and the mobile phone technology allows for these networks to be built. And once that network's in place, it's faster to build the next network. So in India, for example, they've just basically given out free data to every mobile phone in India. So guess what? Data usage is the highest in the world. And so their internet scaling becomes faster. So the internet was huge, as we all know, and it remains huge. So at 63% a year, it then flattened out over time as more and more people got adopted. So at 1997, it was growing at 63% a year, and there was 140 million users of the internet. In 2021, there are 140 million crypto users, and it's growing at 113% a year. Jesus. Double the speed. Now, this is where humans struggle. Linear numbers and exponential numbers. Because it's exponential, it means that growing at 113% a year, we're going to go from 140 million people to 1 billion people by 2024. Jesus Christ. I mean, so when you go back and how you introduced all of this. So if you know that something is being adopted at this speed and it's a network of money at its core, and you can buy an infinitesimal fraction of it, so everybody can buy 10% of their net worth, then everybody who takes this opportunity will probably have the biggest opportunity in history to make money. There's a bunch of retirees, the baby boomers, and they've kind of screwed it all up because they've got all the debt. They've got too much equity exposure. It's really hard for them to retire. This is why the Federal Reserve don't like equities going down, because you've got this richest group on earth who are kind of stuck. They never got enough money to retire on. But I want to look through the eyes of the millennials. So they are 32 years old. At the same age, their parents at 32, the baby boomers, had all-time cheap valuations of equities, all-time cheap bonds, all-time cheap credit, all-time cheap property, right? So they couldn't help but make money. They kind of screwed it up because they actually ended up going into debt as well. But they couldn't help but make money. So then the millennials had the opposite: all-time record valuations of equities, all-time record valuation for bonds, all-time record credit, all-time record highs in property. So I'm like, these guys are screwed unless something else comes along. And that thing is crypto. Because future expected return of crypto, it's been growing at 213% a year in returns. That's how much it makes, even though it's very volatile. Sometimes it's down 70%. Over time, you're making 213% a year. It has grown as an asset. It's gone up. I think it's 2 million% since inception. No other asset in all recorded history has ever done this. And we haven't even started. I still think there's probably another 100x from here. Not even the baby boomers got given that. The S&P didn't go up 100x since 1980. So this is the magnitude of what's there. So I'm screaming from the rooftops saying, you might be cynical. You might think you don't understand it. You might think you can't afford to play in this, but you have to listen, because this is the opportunity. You can't come back to me in 10 years' time and say, well, we missed all of that. All the rich people got richer. No, you, I, everybody else is saying, now is your time. Don't be irresponsible, dollar cost average, do all the right things, but here is your opportunity. This is the biggest opportunity I've ever seen, and I'm going to take advantage of it. And so should everybody else. This is not rich or poor. This is an every person opportunity. And we've never had this before, ever. You start with understanding money, which most of us don't think about. Then you kind of understand how we're getting screwed by central bank printing and the debt-laden economy and what it means. And then you start saying, oh, okay, but that's Bitcoin. And then what's this Ethereum business? And then you start realizing decentralized finance. And you're like, it's kind of a finance thing, but that's kind of cool because I can get yields now. I can get, instead of getting zero on my bank account for my hard savings, I can now get 6% a year. Wow, that's a difference. It's like going back 25 years in time. And then suddenly NFTs come and community tokens. And suddenly your mind is completely blown that this is not just money. It's the entire exchange, transfer, and storage of value for the internet. Whole business models are about to change massively because of what this technology unlocks. And then once you get your head around that, you're like, oh God, I can't even hold this in my mind any longer. It's so big. And that it's not just buy some Bitcoin, I'm going to make some money over time. It's actually an entirely parallel financial system and business structure for the world. And it's being adopted faster than anything we can ever imagine. The world has a history of money, whether it's backed by gold or not, where government gets themselves excessively into debt and they devalue the money. So the Romans used to clip the edge off the coins so there was less gold in each coin. And eventually people would lose faith in the coins because they blend them with silver and then blend them with copper. And, the coins were worthless because that was supposed to be worth the value of the denarii in Roman times. But governments can't help themselves. Humans, we're just humans, right? Humans are fundamentally flawed creatures and we always will be. So then we have these gold standards. The US and the UK are on gold standards. World War I, World War II, we all have to leave it because we've got too much in debt again. We've overly financialized yet again because humans love leverage above all things. It's kind of sex and leverage are the two things that drive humans for some reason. Then we adopt a new system, which has been around before, but it keeps getting abandoned, called fiat money. Fiat money is money not backed by anything. It's backed by the promise of the central bank paying it. So that's the dollar bill that we all are familiar with. And every country in the world now adopted fiat currency. But as with everything, if you're really thirsty and I gave you a bottle of water or sold it to you, you'd probably pay me 10 times too much for that bottle of water. If I give you 1 million bottles of water, they're worth precisely zero to you. So scarcity has value. That's art, that's cars, that's almost anything. Humans value scarcity for whatever reason we do. And so if you're printing too much money, you're creating less scarcity. So yes, there's money everywhere, but the money has less value. So once you understand that, you say, well, what does it mean? The dollar hasn't collapsed. It's kind of where it was versus the euro in the last 5 years or whatever it is. And then you say, but my $50,000 salary now can buy me much less shares in Apple, Amazon, Google, Microsoft. In fact, units of the S&P 500. I suddenly can't buy as much. Since 2008, it's a fraction. I can buy like a third of what I could. Same with real estate. Same with gold. And then you're like, assets have suddenly got expensive. They haven't. The value of your savings has gone down, or your money. So you can't afford to buy assets. What is an asset? An asset is deferred consumption from the future. I buy a house, I sell it in the future, I get to retire, whatever the things are, right? We don't buy the S&P because we want to hang it up in our wall. We buy it because we want to sell it at a future date to realize money. So that means our future selves are now poorer. That's essentially what this means. That's what currency debasement is. So Bitcoin comes along in 2008, in the middle of the crisis. It's kind of like it was perfectly prepared for this and said, Satoshi goes, hey, look at this. I can create an algorithm that only creates so much of this thing, the Bitcoin, and it can never vary, ever. So therefore, this is scarcity that humans can't fuck around with.